Hi, I'm Pat Keown, a Senior Research Analyst with Refinitiv Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, August 26th. We'll start this week's report by taking a look at the overall fund flows results. Equity funds had net outflows of $7.2 billion. Taxable bond funds and muni bond funds took in $5.9 billion and $1 billion respectively. Money market funds saw $4.6 billion leave their coffers. In market activity, the equity indices all posted gains for the fund flows trading week. The technology-heavy NASDAQ Composite Index appreciated 4.7% to lead the way, while the S&P 500 Index and the Dow Jones Industrial Average recorded gains of 3.1% and 2.3% respectively. The NASDAQ is up 30.1% for the year-to-date, despite its first quarter COVID-19 induced slump, during which time it lost 14.2%. The NASDAQ's bounce during the second and third quarters has also been spurred by investor reaction to the coronavirus. Investors have sought out large-cap tech stocks as a safe haven while they wait out the uneven economic recovery. Market news was mixed this week, as could be expected in these bumpy economic times. On the negative side, first-time unemployment claims inched upwards to 1.1 billion from the previous week's 976 million. As the labor market continued its uneven recovery, the U.S. Consumer Confidence Index cratered to a 6-year low. The index fell to 84.8 this month from 91.7 in July. On the plus side of the ledger, the U.S.-China trade deal appears to have been resuscitated. U.S. home sales increased at a record rate for the second straight month, and the purchasing managers' indexes for both the manufacturing and service sectors grew at a higher than anticipated rate. Let's turn our attention back now to the fund flows activity for the week. We'll take a closer look at each one of these fund asset groups and explore the changes. Equity mutual funds. The $7.2 billion net outflow was the group's 18th straight net outflow. As usual, we see the majority of the net outflows are coming from domestic equity funds at $6.2 billion left, while non-domestic chipped in $1 billion to the total net outflows. Getting a little more granular with this, down to the peer group level, we see that large cap growth funds had net negative flows of $1.2 billion, and international multi-cap core funds had $476 million leave their coffers. Equity ETFs. Net outflows here again last week. They had $527 million leave. The most significant net outflows, as per the chart, belong to the Spider S&P 500 ETF and the Invesco S&P 500 Low Volatility ETF, which had roughly $1.5 billion and $460 million leave, respectively. On the plus side of the ledger, we see the iShares Russell 2000 ETF with net inflows of $420 million. Our next group to look at is taxable bond funds. They are also on a streak. They've had 20 straight weeks of net inflows. This week they took in $5.9 billion. Driven by a couple of intermediate term peer groups as the Core Plus Bond Funds and the Core Bond Funds group took in $1.3 billion and $1 billion of net new money. Moving on, we look at taxable bond ETFs. Net inflows here again for this group. They took in $2.8 billion. The major contributors were two below investment grade products, the iShares iBox Dollar High Yield Corporate Bond ETF and the X-Trackers USD High Yield Corporate Bond ETF. Grew the coffers by about $800 million and $315 million respectively. On the flip side, we see two Treasury products with the largest net outflows, the iShares Short-Term Treasury Bond ETF and the iShares 20-plus year Treasury Bond ETF, had net outflows of $585 million and $345 million respectively. Our next group to review is muni bond funds. Another streak here again as well. Muni bond funds have taken in net new money in 16 straight weeks. this week, they took in just over $1 billion of net new money, driven by the national muni peer groups as usual, specifically the short muni debt funds and the short intermediate muni debt funds peer groups had net positive flows of $518 million and $189 million respectively. Our last group to look at is money market funds. Net outflows for this group last week, they had $4.6 billion leave their coffers. Their fifth straight weekly net outflow, driven by funds in the institutional U.S. government money market funds peer group and the money market instrument funds peer group, which had $15.1 billion and $2.6 billion leave respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.